Let's talk about XRP right now because there are two things happening simultaneously that seems contradictory on the surface. The network is busier than it's been in months, yet the price is still stuck in a bear market. So, the question we need to answer today is, does this surge in on-chain activity actually mean anything for price, or are they completely diverse from each other right now? First, let's set the stage. Ripple has dropped more than 60% from its all-time high of $3.65, which it hit in July 2025. We are now sitting around 1.41 to $1.47 range, trading inside a descending channel. February alone has been brutal, down over 30% in just the first 3 weeks, which is significantly worse than XRP's historical February average. The token is below all its key moving averages and it keeps printing lower highs. That's a textbook bearish setup technically, so nobody should be calling the bottom just yet. But here's what's genuinely interesting. Analysts are drawing comparison to the 2022 crash where XRP dropped from 78 cents all the way down to 30 cents. And yes, there are some uncomfortable similarities, but there are at least three structural differences that suggest a repeat of that kind of collapse is much less likely this time around. First, realized price. The average cost basis across all XRP holders is sitting around $1.45 mark. When price dips below that number, you historically enter what analysts call deep value. It's not a buy signal per se, but it means the panic selling phase may be closer to exhaustion than acceleration. Secondly, institutional support. XRP spot ETFs have pulled in $1.4 billion in cumulative inflows since launching late last year. In 2022, there was no institutional flow, just retail panic and no one catching the falling knife. That dynamic has shifted clearly. Third, whale behavior. Large wallets, those holding over $1 billion in Ripple, have actually been buying during this correction, growing their collective holdings by roughly 140 million tokens since January. In 2022, those same wallets were sellers. There is another on-chain metric worth understanding: realized losses. Last week, XRP posted nearly $1.93 billion in realized losses, which is largest spike of that kind since November 2022. Now, the same thing aren't just about fear, they represent final decisions. People who sold at a loss have already exited, and historically, when this spikes peak, it signals that weaker holders have been flushed out, which tends to cluster near market bottoms. The last time this happened at this scale, XRP went on a rally over 100% in the following 8 months. That's not a guarantee, but it's a data point worth taking seriously. Now let's flip to the on-chain activity side, because this is where it gets interesting. In just 48 hours, peer-to-peer payment volume on the Ripple ledger jumped 300%, recovering to levels seen before the broader market correction hit. The number of successful transactions also spiked significantly, suggesting the network itself is operating at materially higher numbers. But here's the important nuisance, and this is what separates smart analysis from the hype. A burst in transaction volume doesn't automatically move price. What analysts are actually watching for is whether this on-chain revival aligns with a price structure that starts making higher lows. Right now, those two things aren't in sync yet. Activity has recovered, price structure hasn't. When they converge, when you see growing usage alongside a technical shift from lower highs to higher lows, that's the setup that historically marks a transition from just an activity recovery to an actual value recovery. So where does that leave us? Ripple is certainly in a crypto winter, no sugarcoating that, but the conditions forming underneath are structurally different from 2022. You have institutional buyers, whale accumulation, exchange balances draining as holders move to cold storage, and now a transaction surge showing the network is being used. The price hasn't confirmed any of this yet, but for anyone watching Ripple closely, the next few weeks of price action Specifically, whether it can start building a base above the realized price of $0.45 mark will be the most important tell of whether this bear phase is ending or just pausing. So, if you have got anything to add to it, share your view in the comment section and see you on the next one.